Tsilis joining me, our senior markets correspondent, our tech guru. George, is that you, or is that the AI interpolation of your analytical skills? I guess it doesn't really matter as long as we got something.
I guess sometimes you really can't tell the difference. They're so good at it right now.
Right now, Rivian's getting blasted. I mean, we're waiting for Nvidia. Let's see where the numbers come out. Stock's gyrating, 681, 690, 686, 680, 679. It's ticking around a little bit here. The numbers are out. All right, $60.9 billion for the full year and a quarterly revenue of $22.1 billion, which is up 265% from a year ago, which is ahead of the expectations, which was for $20.4 billion on the revenue. So they smashed the revenue by $3 billion roughly, and then earnings also beat as well. So it looks pretty clean in terms of the trailing numbers. All right, 516 versus 464, 22 versus 20 billion. All right, so about a $1.5 billion beat on the top line. Really healthy, more than almost 25% beat on the bottom line. Trailing numbers are not the problem here. They're guiding for a revenue in the Q1 of $24 billion. So that's their guide for next quarter. That's where things maybe might get a little bit interesting. $24 billion for Q1. Street was looking for 21.9. I mean, George, none of these are misses. They're all beats. It's just a matter of whether or not $24 billion next quarter will be a big enough beat relative to the 22 that was the rough estimate. I mean, a $2 billion beat for a quarterly guidance. Could the market be that unhappy with that?
Well, so here's what I think, OJ. Now, it's too early to tell what'll happen. I mean, a couple things. I don't think, and it could change. Keep that in mind. I don't think we'll see a lot of movement because it's just hard to move a stock like this based on its market cap of 1.7 trillion. Now, just look at the numbers. The 22 billion that came in. Obviously, it beat the estimates. But we're comparing. If you look at last quarter, for the same quarter last year, it's 6 billion. That's a tremendous increase year over year. And if you look at now, next quarter's revenue estimates. Up about 10% relative to this quarter. What I'm trying to say here is just looking at the sales numbers alone, we can actually see revenues are starting to plateau, revenue growth. Mm-hmm. It's still increasing, but it's not increasing at the same clip that it was last year.
Right.
Now, look at the numbers from an EPS standpoint. We basically have over $5 a share print, 516. That's basically over 500% compared to last year, 88 cents. So again, that's a tremendous increase, but, so has the stock price moved tremendously in the past year. For the full year, they estimate it's 59 billion. Obviously, they're coming in ahead of that, at over $60 billion. But I think the guidance, albeit again, it's higher, is not meaningfully higher. And I think that's why we're seeing some give back in the after hours.
So, look, financially, it's a wonderful report. Right? I mean, look, this is just purely a game now of like market pricing. What's the tolerance for valuation? They came into this with the trailing PE almost 100, a forward PE of less than 40. So that's where the expectations are baked in. This massive reversal of fortune for its earnings potential going forward. So the math basically on an annual change for revenue goes like this roughly, because they just reported a beat of about $2 billion, okay? So the year-over-year change that I cited there is going to be bigger than next quarter's year-over-year change. I mean, look, we're getting like very, kind of finicky here, but I think this is what the stock deserves at this point when you're trading like it has been. The massive growth on an annual basis is going to slow marginally next quarter. So that's going to drop to like 230%-ish by my math, because they're guiding for 24 billion next quarter, and the annual comparable was about 7.2 billion. that gets you about 230% growth, which is going to be like slightly lower than the growth that they're doing in this trailing period. So that's like the only thing we could argue here, GT, is that they're going to slow down. They're going to peak growth in the 200% handle.
No, so that's why I use the word plateau.
Sure.
Again, we've gotten this huge parabolic move. Now we're plateauing with slight and steady incremental increases in both sales and earnings. And look, the estimates prior to today's release for full year 25 for their fiscal year, which is again the next 4 quarters, is 94 billion. So I'm sure that's going to move higher. But compared to last year at 60 billion, you can actually see what I'm talking about in terms of that plateau versus last year. We were talking around 20 or so billion. About $25 billion. So we've gotten huge movements already in the stock price, huge movements in sales growth and earnings growth. And just to give you another number in context here, they printed $5.16. Now for the next quarter, for the same quarter next year, right now the estimates are $5.71, and I haven't seen. So my point is, you can see that that's only about a 12 or so percent increase compared to the higher number they just released this time around. So unless they move the entire curve for earnings and sales for the full year, it'll be tough to move the stock, considering, again, it's only trading around 32 times forward earnings. But, if they actually hit the number of $4.64, next year's number for the same quarter would only be about 23% increase in growth for EPS. So it was already trading at around 1.3 times earnings, but you can make the case that it should trade at that or even more because it's a very unique product, a unique company.
Data center revenue's up by 400%. I mean, that's wild, man. That's why you've got other stocks rallying and following suit with it the past year, because when that's where all the action happens in today's world. So, and keep in mind that post-COVID, the data centers basically shrank a little bit, and their growth really slowed down, rather. So, we had that big boom from COVID that looked like it was going to never be able to be topped. But Nvidia, at least, its own data center demand here is extraordinary. Gaming's back too. That's up 56%. Automotive, the only weak part, but who cares? We've already knew that. That was known, right? All right, GT, good analysis. Slowing from 265% growth to 233%. Not the most compelling bear case I've heard, but we'll see what happens. Glad we got you, George. Thank you very much.